Hello, everybody. So I'm recording this video here on a Monday, and I wanted to give you all an update on Alibaba. Okay, I released a document highlighting the essentials from both the conference call and the earnings report with our school community. But I wanted to record a video as well. And in case you don't know, for those of you who don't know, and I are watching this video for the first time, Alibaba is by far my largest portfolio position. I started buying shares at around $100 per share and slowly continued to average down. And yeah, so I brought my average cost per share as down to $74, and now, well, I've already doubled my investment practically. Okay, and I haven't sold a single share because I still believe there is a lot of upside potential. And what happened was, so I run a concentrated portfolio of six companies, and they are all number one or number two companies in their respective industries. So they have what's called a big competitive advantage. But I bought them with a significant margin of safety, and why I'm saying this is that I don't think that this was a blow, like a standout report. So unlike many other companies in the portfolio that have delivered that have delivered positive, strong earnings reports, I don't think this one was that significant in the case of Alibaba. But interestingly enough, it was enough for the stock to jump 13%. Because what it takes when you buy a high quality company that is so depressed, right? There is so much negativity built into the stock. What it takes is just it's like something positive, right? What it takes is just a catalyst for this thing to actually to explode, and I think that's pretty much what we saw with Alibaba. I will walk you through the highlights from the report right now, and I took the liberty, as I always do, to condense everything into a Word document. And this happened after I analyzed both the presentation that they released to the press in public, and also the the other report. Okay, so what are the main highlights? So you can see that year over year, just by looking at the revenue jump, you can see that year over year revenue only increased 2%. At first glance, this is like, oh, this is slow growth, right? I mean, this is not that positive at all. But you have to look under the radar. In fact, you have to to delve deeper into the report, and if you do that, you will see that there is a very there is a very good explanation for the slow revenue growth. And the reason is that Alibaba sold two perpetual money losing companies. So if I scroll down, you can see that the revenue deceleration was not due to weakness, but the sale of two perpetual money losing businesses. And that includes Sun Arts and InTime. Look, I love this because what this tells me is that the company is focusing on the long term, and they are willing to sacrifice short revenue over the short to medium term, just to build sustainable revenue growth over time. So this is a big positive for me. It's something that I really like to see. It's a smart move to strengthen the company's core, right? And so otherwise the revenue would have jumped 10% year over year. And if I go here to the presentation, you can see that for Alibaba China e-commerce group, for example, jumped 10%. Yeah, but then of course, consolidated revenue was only 2%, and they explained that in the notes as well. Okay, with regards to Sun Art and Intimi. So let's go back up. So income from operations, you can see that it was down 3%, but this was mainly due to lower adjusted EBITDA. So profitability did take a hit. Why was that? Adjusted EBITDA was lower because this was a reflection of heavy investments in Taobao Instant Commerce, user acquisition and technology. So this quarter, the company launched Taobao Instant Commerce on the Taobao app. Okay, and the goal is to meet consumer demand for on-demand delivery across food, groceries, electronics, apparel, and more. This feature provides deliveries of certain products in China within an hour. So this already is seeing significant growth. You can see that if I go here to the revenue breakdown in the presentation, you can see that quick commerce, as you can see, had 12% year over year revenue increase. So this is definitely something good to know, and it's important for Alibaba to continue to make to make wise investments in their across their e-commerce platforms, because that will create more competitiveness down the line. Don't forget that China is a very competitive country. Okay, so we have the pressure from Pinduoduo and other giant retailers in the region. And while Alibaba still maintains a substantial market position in that field, it's important that they increase the gap to competition, right? To widen the gap to competition. And so I like to see that, and I don't expect things to change. But because Alibaba is a cash flow generating machine, they can afford to reinvest a big chunk of that cash back into the business in hopes of bearing the fruits down the line. So let's go back to our document right here. And you can see, let's continue. So net income was a 76% jump, which is a lot, but this is also expected because Alibaba has a portfolio of Chinese companies, right? And as you know, the Chinese market has been under pressure, so many of those shares collapsed substantially. And look, and because the market has been rebounding, then the portfolio will rebound, and that will become unrealizable gains, which is factored into net income. And so when I'm looking at earnings, I don't really pay attention to this figure as much, not in the case of Alibaba, because exactly for that reason. All right. Now, non-GAAP net income, this is already more reflective because it excludes all these non-core operating items. Okay, so non-GAAP net income decreased 18%, and this is more in line with the profitability pressure that we saw above. Okay, exactly because non-GAAP excludes investment gains. So the negative figure again was primarily due to the investment in Taobao Instant Commerce as well as user experience. The same happens for non-GAAP diluted earnings per share. This is something that I didn't like to see. So what happens is that margins, of course, on the back of decreased profitability, margins are facing pressure. Okay, so operating margin declined from 15% last year to 14%. Adjusted EBITDA margin declined to 16% from 19%, and adjusted EBITDA margin declined to 18% from 21%. And then, of course, because the company is investing a lot to stay competitive, right? You can see that free cash flow and cash from operations took a substantial beating. So actually, free cash flow, we saw an outflow of almost 3 billion. Higher cloud infrastructure, right? So the company, not only is the company spending a lot of money in e-commerce, but they are also spending a lot of money on AI. So they are in fact, they are the number one AI player in China. That was part of my bullish thesis about 3 years ago, and the situation has not changed. And fortunately for us, we are seeing already fruits. We are seeing the rewards from all the investments that the company has been making. But I will walk you through in a bit. So sales and marketing expenses jumped. Okay, so this is part of the operating expenses. They jumped to almost 22% from 13%. So not something great to see. But of course, this is contributing to that margin pressure. But you can see that the surge in marketing underscores Baba's push to strengthen user experience and accelerate growth in China e-commerce. As far as strategic and segment highlights, I already discussed the Taobao Instant Commerce, okay, a new feature that the company released. And investments in quick commerce, as you can see, drove a 25% year over year increase in monthly active consumers on the Taobao app. Okay, so they are already seeing the benefits from all those investments, which is good. I think this long term will unlock more revenue growth, expanded warehouse coverage and offerings, and that's it. Also important, customer management revenue. This is important. 10% plus 10% supported by higher take rates. So this is important. If I go here to the presentation once again, you can see that revenue breakdown. So where is it? Customer management right here, 10%. So look, things are not that they are not that bad. International continues to grow very attractively at 19% year over year growth, and I will talk about that right now. So you can see that revenue jumped 19%. And what's more important, if I go now to profitability, and I think this was another reason why the stock jumped, was not only because of the developments, the positive developments that we are seeing at the cloud segment level, but also because of what we are seeing with Alibaba International. And why is that? Is because the loss, this money, this segment is still losing money. Okay, the company is still reinvesting a lot into growth, but revenue jumped 19%. But you can see that profitability is still under pressure. Where is this? Profitability still, yeah, significantly under pressure. But what's incredible is that those losses have narrowed substantially if you compare that to 3 months in the June 30, 2024. Take a look at this. Adjusted EBITDA was negative, as you can see, and now 3 months in a June 30, you can see that is actually a positive. Okay, so it's a big jump. I like to see that, and yeah, and look, I think this is going to be very meaningful for the company. Right here, adjusted EBITDA was negative, but then you can see that though it's still negative, but those losses narrowed substantially. I like that. I think it won't be long before we start seeing this becoming not only profitable but also contributing more and more to overall revenue. And the same happens with the cloud in AI segment. All right. So moving on, cloud intelligence group. This definitely stole the headlines, and so revenue jumped 26% year over year, which was up sharply from 16% growth last quarter. And this growth was driven by public and cloud demand and rising adoption of AI related products. We already know that AI is a buzzword these days, but this is very, very important. So AI related revenue delivered triple digit year over year growth for the eighth consecutive quarter, guys. Okay, this is so important, and I'm going to show you this right here. Look at that. So cloud infrastructure is right here. So it was a 26% year over year jump, and you can see that adjusted EBITDA continues to improve um, a lot. Yeah, which is something that I like to see. This is another thing, another segment. I mean, that is going to contribute more and more to overall revenue, and I think that's part of the thing, right? I think Baba is not only one of the well, Baba is not only one of the biggest e-commerce players in China with a substantial market share, but they are the number one cloud service in AI. They are the number one cloud in AI service provider in China, and the market is still pricing Baba uh, while discounting all those main businesses, if you ask me. And I will show you. I will talk about valuation shortly. All right. And another thing. So here's my thing, my take. What I think to be the most important things to notice is that on the surface, this wasn't a blowout quarter. Revenue growth was modest, but you already understand why. Margin compressed and free cash flow turned negative, yet the stock surged. So why was that? The reason was cloud revenue accelerated, as I explained, and management has guided for strong cloud results and the business delivered. Okay. So I like to see that. And another thing that I like to see with regards to prudent capital allocation is that revenue deceleration was not due to weakness. I discussed that, but also due to the sale of two perpetual money losing businesses. And of course, that stopped revenue from jumping more. And it's nice to see again that management seems to be taking decisions with the law with shareholders' interests at heart. Okay, and that aligns with what the CFO mentions right here. You can see that the strength. We also okay. We executed well against our commitment to improve operating efficiency. If you have money losing businesses in your portfolio, you should get rid of them. Okay, and that's exactly what they have been doing, and I like to see that. Okay, even if that costs revenue growth over the short to medium term. Okay, and yeah, bottom line, free cash flow, of course, collapsed, but you already know substantial capex investments in AI infrastructure, right, and also e-commerce. Bottom line, so Alibaba is in investment mode, but the cloud business is starting to look like AWS of Asia, delivering accelerating growth while the market still values it at a fraction of Western peers. Despite all the progress, it continues to trade at multiples unheard of for AI cloud companies outside of China. All right, and I love this, and I'm going to show you why. So even though the stock has rallied substantially from the lows, as profitability continues to increase, because if price doesn't increase at about the same rate, what happens is that valuations will compress, will remain compressed. And if I go here, you can see that Alibaba, let's look at Alibaba right here. You can see, I'm going to show you what I mean. You can see that they are still trading, despite the rally, they are still trading at a forward PE of 14.50, which is unheard of among AI companies. All right. So this is the company that is by far the best AI player in the world. And another thing that I mentioned before is that in the market is not again is not this is the company is not priced as though this was the case. So Alibaba has practically stakes in every major AI company in China. What they do is they go to these startups and say, "Hey, do you need cloud service? You can use ours, but in return, we need a stake. We want a stake in your company." Okay, so if some of these companies will flourish, Alibaba will be able to capitalize on that growth, and that is not reflected in the stock price either, which is something that I love because over the long term, remember, stock prices always follow the evolution of the company's fundamentals, of the company's earnings per share. And as earnings per share continue to improve, so will the stock price. All right, and we are already seeing that right now, and I expect that to continue. Okay, and look, what can I say? I wasn't expecting this jump, as I told you in the beginning, but it's nice to see that many of their segments are improving. Revenue continues to. We already know that the situation is in China is definitely is not the best, and so because the market is very competitive, and it's nice to see that the other segments are actually contributing more and more to revenue because as that continues to happen, they're going to rely less on mainland. Okay, and I think that's going to unlock more value down the line. That said, I'm not selling any shares. I continue to be very constructive long term, and I still think this thing can go much higher. Look, if this thing gets to about, per my very conservative evaluation valuation models, I so based on my calculations, I believe the fair value of this company sits between 220 250, and that will mean a triple of my investments. Can this thing move back to its previous all-time high at $320 per share? It definitely can, as the market becomes more constructive on China overall, and as Chinese consumers start buying more, then of course Alibaba, as one of the major players, is going to be one of the major beneficiaries, and that will drive revenues and profitability higher, and the stock price should play catch up. So we will see. We will see. But I will remain invested as long as the fundamentals continue to improve. And I think we have a long way to go to 250. Okay. So I'll keep you guys posted. Ulta Beauty it's interesting because Ulta Beauty or reported, which is also one of my portfolio positions, reported earnings last week, and they were fantastic. The stock jumped 5%, but then it closed the day -7. And I don't really understand what happened, but I don't really care, frankly, because the fundamentals are improving. So I'm glad to be a shareholder in the company as well, and I will record a video on Ulta Beauty covering the main highlights this week as well. So stay tuned, and let me know let me know in the comments if you like this video, and if you want me to put out more content like this. Have a great day.